Bill here with the Metals Minute. Today is Wednesday, April 5th, 2023. Well, we have three of the four metals up for the week. Gold and silver are the big winners. We also have year to date, I've noticed gold is leading the way, up 10% year to date. Silver is behind gold, but it's closing in. We have some supply issues that are challenges for silver this year that will be supportive of the price. We have some political instability in areas that are historically large silver producers, so it's put the production of silver in question as to how much we'll be able to see from there, while demand is rising. So there's an increased demand for silver and some issues with a lot of the supply internationally. Some of the leftist-leaning election results and politicians in Central and South America. So that's one of the reasons we see silver continuing to climb, and well, that'll be a supportive indicator of its price. With gold, we have continued strong support from central bank purchases. 2022, we've discussed before that was a record year for many years, since 1967, I believe, the most central bank gold purchases. We've seen the fastest beginning of 2023, the strongest initial support, looking at the January and February numbers, has been the highest gold purchases since at least 2010. So that's as far back as we were able to look this morning, but highest number since then. And of course, those monthly numbers are delayed a little bit, so February was just released. And central bank purchases of gold January and February this year have outpaced every year since at least 2010. So we also have other reports that are indicating some of the analysts at Van Eck, which is a large investment firm that manages a significant amount of alternative assets such as commodities and gold. They believe that gold is in the beginning stages of a multi-year bull run. Now that's not anything that you haven't heard if you've been a reader of the blog here or watched the YouTube videos with the Metal Minutes. For some time we've talked about what happened the last time we saw stagflationary conditions back in the mid-70s to early 80s, and how that gold went on to increase 8 times in just a period of a few years. Now it doesn't happen overnight, and we've been watching these conditions develop for the last year and a half. But I'm looking at a new index I call the Chile Index. That's one of the things that I'm requested to make sometimes by the family, and so my chili used to cost it would be between $18 to $22 when I would go pick up the supplies at the grocery store, as early as just a couple years ago, but now it's $37, $38 for the same items. So inflation is certainly there, and there's increased talk about recession, and some of the lead economists are now saying they think it began at the end of last year. So we're in that period of time where we have continuing rises in price, while there's also slowdowns in many sectors of the economy. We see real estate beginning to take a hit in various sectors, various regions of the country, both on the residential side and also commercial. Commercial is one of the big, the next shoe to drop, so to speak. So we see challenges in the economy, at the same time prices are rising for everyday items. That's a classic stagflation situation. So gold is typically a good performer in that type of environment. We also see some central banks in the Caribbean, a couple of smaller nations are selling gold for the purpose of shoring up their balance sheet as an accounting mechanism, because they have unrealized gains in the gold that will help offset shortages in their budget or on their capital account. So they sell the gold just simply to make the unrealized gains realized, strengthen their balance sheet, and in every case so far they've gone right back and repurchased the gold they just sold. So, because they don't want to be without the gold, but they want to lock in the gains from an accounting standpoint. And so this is something that we may see happen, something the United States government did back in the 30s. They collected all the gold and then they revalued it according to their currency, and you know, as gold rises it can be sold, and it's all accounting gimmicks, but what they're trying to do is use the gold to shore up their balance sheets. And so that's something that you and I can do as well. That's one of the reasons to hold gold. As other things begin to look a little more dire and a little bleak, and the banking crisis is not going away. In many ways it's just beginning, and so there's a lot of challenges in the realm of bonds, including government bonds, the valuations there. We're likely going to see the interest rates, instead of continuing to rise, they're likely going to begin to come back down, and we're starting to see the evidence of that. So these are all indicators of why gold is continuing to perform well, and already up 10% year to date. So inflation protected bonds are right at 6.5% for holding it for a whole year. Gold's already made 10 in 3 months and a couple weeks. So anyway, thank you for tuning in. A lot going on in the precious metal sphere, and we look forward to keeping you updated, and have a great rest of your week. Thanks for tuning in.